Hey everybody, Felix Stoffelbaker here. Here's an article by The Money Game, and this is exactly what I was talking about. You can always go and look these types of things up and they tell you exactly what's going on. Barney Frank talks about more about the surprise shuttering of Signature Bank. The sudden string of bank failures over the past week conjured dramatic flashbacks of the 2008 financial crisis for many a banker. Following Silicon Valley's unexpected collapse Friday, people on Wall Street and beyond tried to piece together what went wrong and how regulators missed the signs that led up to the second largest bank failure in U.S. history. Then, just before the Oscars Sunday evening, New York regulators announced that they had closed and taken possession of Signature Bank, a Manhattan institution relied upon by other banks. The news blindsided just about everyone, including Barney Frank, the former congressman and architect of the landmark Dodd-Frank banking regulations, which also happened to sit on Signature's board. The irony of a man who sicked financial witch dogs on the banks now is on the losing side of the latest banking crisis was too much for many to resist. Frank was having his very own Dick Fold moment, Bloomberg wrote, referring to the last chief executive officer of Lehman Brothers. The Wall Street Journal, meanwhile, sneered with schadenfreude in an op-ed at the man who kneecapped the banking industry more than a dozen years ago. Frank, for his part, was quick to suggest that Signature was the victim of a political attack, telling CNBC on Monday that regulators wanted to send a very strong anti-crypto message. The New York Department of Financial Services on Tuesday pushed back on that assertion, telling Bloomberg that it had a crisis of confidence in the bank's leadership. But in a new interview with New York, Frank argued back. Speaking from St. John, Frank explained why he blames regulators for unreasonably putting Signature Bank out of business and what he really thinks about banking crypto, and defended himself against the critics who have accused him of switching sides. Who is to blame for Silicon Valley Bank's collapse? I don't know. I'm not familiar with Silicon Valley Bank, so I can't tell you. I can tell you from Signature's part that it was triggered a run on deposits in our bank irrationally, because whatever Silicon Valley had with regard to high-tech and crypto, we don't. We're not a big high-tech lender. We're a big New York City housing lender that more than anything else, and commercial property. We weren't having crypto as our own asset. We were simply allowing two businesses that were customers of ours that wanted to deal with each other in crypto to do so. We were the facilitator. But the other part that we had was this. We had a large depositors way beyond 250,000. That was because our customer base is made up of majority property owners, and the years when we did the original Dodd-Frank bill, I wanted to extend the deposit guarantee to cover businesses that had a lot of cash on hand. I lost on that for a variety of political reasons. So you had was Silicon Valley is deteriorating, failing. We are seen by some people as a crypto bank, and secondly, we have a large number of uninsured deposits, and they panicked and started withdrawing. That's what happened Friday afternoon. If the FDIC and the Fed alone had done on Friday what they did Sunday, we would not have been in any trouble. And secondly, if they'd allowed us to open on Monday, we would be in good shape. We would have been operational. The closure of Signature Bank surprised a lot of people because it didn't initially seem affected by the run earlier this year at Silvergate, the California-based bank that primarily served the crypto industry. I'm very disappointed to learn, apparently the Department of Financial Services in New York, which did the closing, hasn't said that we're insolvent. They said, well, they had a problem because they couldn't get sufficient data. I mean, I was disappointed when they closed it and sort of vindicated. They have not argued that we were insolvent. I think that's very clear. If we had the benefit of those two announcements, we'd still be an ongoing bank. Now the question is, Why did they react so harshly, and to what they said was our inability to give them the sufficient data? I believe it was probably to send a message that even though we were doing crypto stuff responsibly, they don't want banks doing crypto. They denied that in their statement, but I don't fully believe that. I think that they're overreacted to what they saw was our problem with the data, which may well have existed, but the data was improving. I think sloppy data is not a reason to close a bank that you have not decided was insolvent and that they never said were insolvent. I mean, is that legal? Can the government just seize any bank, even if it's not insolvent? Well, that's worrisome. Let me say this. I don't want to comment on that personally because as a director, I could be conceivably involved in any kind of lawsuit that anybody brought, but I think that is a very good question you raise, and particularly somebody ought to look and see. I wonder, are we at the first bank to be closed totally without being insolvent? And if so, why? I think the DFS, the state of New York, people should have to answer that. That's why I speculate that using us as a poster child to say stay away from crypto is the reason. Were there any warning signs that the government was planning an action against Signature Bank because the New York DFS was reportedly considering closing it last week before the run? No. I was at a meeting with the regulators a few weeks ago in the middle of February. There was nothing suggested that we were in danger of being closed. There was no indication of that then. Hard to see what happened in a week. Do you see this as maybe the beginning of a larger crackdown by the government? No, I don't think they have to. I think that there's already a retreat by banks from crypto. The discipline was in the British Navy, and in one case, the British Navy executed a guy for a relatively minor infraction because they worried about the behavior of all the sailors. And the French said, oh, those peculiar English, they shoot one man to encourage the others. And the phrase, pour encourager les autres, people understand what that means, and I think it's probably working. You've said regulators are sending a strong anti-crypto message to the banks. Do you think that attitude is misplaced? I think that it is misplaced to say that there's no way a bank can do crypto. We did it in a reasonable way. We weren't counting on the value of crypto ourselves. We were facilitating other people doing it. I will say I'm skeptical of crypto in general and always have been, but I think what you need is more tougher regulations on crypto, but not by the banks, by the SEC and by the Fed. There's a lot of talk about the weakening of Dodd-Frank in 2018, and Elizabeth Warren has blamed for the recent failures of banks like Silicon Valley Bank. Do you agree? Congress raised the dollar amount by which you got strict current scrutiny, but I also don't think that there was anything that wasn't quite caught as a result of that. They were still regulated. I was on the board of Signature Bank before and after that bill went into effect. I can guarantee there was no diminution of regulation. And in fact, it was that the state of New York had stepped in and they were not affected by the 2018 bill. If there was something that should have led them to do it earlier, they had in 2019 every power that they had in 2013. Finally, I do want to say from my own personal standpoint, I came to the conclusion in 2012 that $50 billion, the minimum amount of assets banks needed for Dodd-Frank to apply, was too low and was arbitrary. So I made a speech in 2013 to a conference that the Federal Reserve had in Chicago saying two things. One, that we had to protect small banks and exempt them from the Volcker rule, which we did, and two, that we had to raise the $50 billion limit. And I said that because if you read the paper, it sounded like, oh, I did that to help Signature, and I came out publicly for raising the $50 billion 2 years before I'd ever heard of Signature. Now people are saying we need more banking regulation, particularly on mid-sized banks. Are banks unregulated? I think the power is there. I think what you may want is the regulators to do more. It's possible that under Trump they weren't as tough. I do think if there's a need for tougher regulation, they have the power to do that. What they did in 2018 didn't reduce the powers of the banking regulators. It removed the requirement that they be extra careful with the mid-sized banks, but they still had all the powers if they found anything wrong to act. Nobody pointed me to a legislative change you need, except I would say raising the level of the FDIC deposit guarantee. Do you feel that the 250,000 FDIC insurance limit is outdated? Here's the deal. It used to be 100,000 in 2008. The FDIC, dealing with the financial crisis, temporarily lifted it to cover businesses. So with banks failing, they wouldn't withdraw. In fact, if you're not insured, you withdraw, you go to the biggest bank. It's good for JP Morgan and Bank of America and bad for everybody else. When did our bill, I wanted to continue that. I didn't have an exact number, but I do want businesses that have cash, including payroll needs, to be able to have enough guaranteed. So if they don't have to withdraw during the panic, I lost out to that. The biggest banks and their potential influencers want to keep it low. The lower the guarantee, the more they think that they'll have a comparative advantage. And I wanted it changed. I hope going forward people now understand the argument we are making. I hope that my former colleagues will now legislate. I notice even Elizabeth Warren, with whom I disagree some, agrees on this, that they should change the limit. Not for personnel. We're not talking about pocket money for a millionaire. We're talking about for a business that has a need for cash flow to run the business. I would say for at least 2 months they should be allowed to get a guarantee, giving them a chance to rationally deal with any issue. So that was basically a summary of Barney Frank's interview on what actually happened. So he's telling you that they're coming after crypto. They weren't insolvent, which I already went over in the Silicon Valley video, and that these people are literally coming after anyone who's involved with crypto. And then something else that's interesting is he even pointed out what I've said already, that these JP Morgans and Bank of America raising the limits or affecting the limits at all will benefit those too, the big banks, and that everybody else will be hurt by that. It'll be bad for everybody else. And it's just a consolidation, and exactly what I've been talking about. So these are coming from the people who are actually living it, witnessing it, dealing with it, and we can just see Operation Choke Point 2.0 taking a full hold, and it's just unbelievable. That's why sometimes it's good to let things kind of let the cards and the chips fall, and then be able to see like the actual picture. One of the things that I did was jumped on the GameStop thing a couple years ago, that like the day or two after, and basically made a bigger deal of it than it ended up being. But that's connected to all this. But now we're starting to see the real players and the real thing. It's all a controlled collapse. It's all a controlled demolition. It's methodical. It's planned out. It's not random. And these people are maintaining severe control, total control of this entire process. And if you can understand that, you can see that, oh, this particular event isn't the one end all be all, but it is in line with what's going on, and to move us towards a central bank digital currency and move people away from the ability to put large sums of money into real assets like Bitcoin. And that's literally coming from the guy that had the bailout reform from the financial crisis in 2008, saying, hey, they're just coming after crypto, y'all. They're coming after crypto. They're coming after Bitcoin. And they weren't even involved with it. They were just facilitating two businesses that were doing it. And that was enough for them to come in and just seize the bank. So this is getting really crazy. I just want to put that out there. Staffelbaker out.